The live show is connecting. TradingView and TradeStation. Let's give this, I want to say 10 seconds just to make sure it fully connects. And ladies and gentlemen, I have got the green light that we've established an excellent connection. We are live on TradingView. This video is also on YouTube Live. And before I kick off the show, it is important for me to say that we have David Russell here. And this show is sponsored by TradeStation. And TradeStation pursues a singular vision to offer the ultimate online trading platform and services for self-directed traders and investors across the equities, equity index options, futures, and futures options markets. And now, I must say, the reason why I always like having David on the show is because he is the man behind the TradeStation account. And he is creating those awesome ideas, those great charts. And by the way, totally free for the world to look at. And you're meeting the man behind that account, which I just think is so cool. You don't get access very often to true professionals like this if you're just a retail trader and investor like me. So it's a pleasure, David. Welcome back to the show, but I'll let you take it away first because I know you have some important things to say.
Yeah. Well, Steph, it's great to be back with you. And I am just starting off actually showing you the TradeStation platform. And I'm showing you this because these are some ETFs. I'm going to mention a few of them. And I wanted to show you the standardized returns of some of these ETFs. So I just wanted to kind of get that out of the way. Now, I am showing you the TradeStation platform. And some other stuff here that's pretty interesting is I use this to really kind of determine where parts of strength are in the market and different kinds of rotation. And I think right now, right off the bat, I think I should mention that, there's evidence in my view that we are actually now at the beginning of the rotation to small cap and to value. Not to say that growth is going to really die from here, but it's had such a move. And we're also about 1 year away from the beginning of the AI boom in March of 2023. So at this point, this is run now, and there are some other things taking shape beneath the surface. So one of the things I do with this workspace is I look at these different ETFs, and I look at them over different time frames and see what they're trying to tell me. And what's very interesting to me here is we look on the 21-day, which is a 1 month performance. We can really see the leading sectors are energy, materials, utilities, industrials, financials. Where's tech? If you look down here, you can see SMH, the semiconductors, are still performing pretty well. But if you look in other areas, you can see here that the software is actually negative in the last month. Technology itself is lagging the S&P. It's up less than 1%. The S&P is up 2.6%. So this is already starting to tell us here that, aside from the massive outperformance we saw in a handful of in semiconductors and especially NVIDIA, and Micron recently, the rest of tech is kind of increasingly kind of lagging. Now, also here we have something when we compare growth and value. If you look over the long run, IWF is a growth ETF. Over most time frames, growth has outperformed, but in the last month, we see value strongly outperforming versus growth. So again, that's another kind of sign here, I think, that we're starting to see, this rotation is starting to take shape. As I jump over here to another thing, this is my breadth workspace, and this has some different breadth indicators. One of them is the number of 52-week highs and low in the S&P 500. Back on the 21st of March, it hit the highest level since May of 2021. And normally when you start to see that many new highs in the S&P 500, the market tends to have a kind of gentle melt higher. It doesn't just mark the top. Usually what happens is it's a continuous sort of melt higher, and then what you'll see before it starts to pull back sharply is you'll see fewer and fewer highs. The market will stall, will make highs with fewer 52-week highs in the internals, and then you'll end up with the sudden crash. And there's nothing like that now. We're at that spot where we're still like the kind of second to third, maybe fourth inning of the advance, but we haven't gotten to the point yet where it looks mature. And we see the new 52-week highs like that, that is the highest number since, like I said, May of 2021. Now, another thing that was interesting to me here is this is a Russell. And if we look at the Russell here, we can see that in the Russell, we're also seeing more companies making highs. And we're also seeing an interesting thing of the internals of it. There's more companies in the Russell now above their 20-day moving average than above the 50-day moving average, which is what this chart tells us. If you look at something like the NASDAQ, that is not the case. So anyway, I think it's just important to realize here that we are seeing some evidence of these things. And I wanted to just kind of mention that. And I think it's especially interesting when we look right now. Tom Lee, of Fundstrat made this big prediction yesterday about how the Russell is going to outperform. He made a lot of arguments based on fundamentals and also the fact that it's relatively underowned, the fact that valuations are lower. But I do think the market has been dominated by a growth story for so long. We haven't thought about companies getting acquired. We haven't thought about things like just the economy accelerating, what that means. Now, I remember when the Fed had their meeting last week, they raised the estimate for GDP. So as recession becomes less and less of a story, investors are going to become more focused on cyclical companies, on companies like banks in particular, that sort of thing, or M&A targets. And that's kind of where the small caps kind of come together. So a few of the things I wanted to just very quickly show you here. Is I'm going to just show you very quickly looking here at this chart. First of all,
and by the way,
go ahead.
And David, really quick, the chart that you were just showing us, that was from the TradeStation account. It was an idea that you published. And do you want to, I think it'd be great to actually, I think this is one cool thing about this show is that I've shared this link in the chat, I believe, so you can walk them through it in real time. And then they can go, if they want to walk through it with you, they can click the link and go through it with you in real time.
All right, so I want to get the small caps, but then it was the S&P first. All right, now look at this. What we have here is we're comparing the market back when we published this at the beginning of March. We looked at the way a few specific indicators, the way the S&P stayed above its 21-day exponential moving average, the way RSI stayed above 50. Steph and I have talked about RSI cooking, and that's what we mean. It kind of just stays up there, gets a little overbought, pulls back, but it never really shows a breakdown. And also the rate of change remains positive on the 9-day time frame. And what's interesting here is now, if we look at the S&P, I put that out right about here on the market. And if you look, we still have seen rate of change stay positive. We've seen RSI stay above 50. We've seen price stay above the 21-day exponential moving average. So the level I've been kind of watching here is this high from March 8th. And it's interesting to see how we broke above it after the Fed. And now we're kind of staying above it. And one more indicator I want to add to this, which is a custom indicator that we have shared. It is called price. It is called, wait a second. It is called price streak, I think. Price streak. This shows how many days price is rising or falling. You can see here we had 3 consecutive down days. So what you really see here is back here at the very beginning of the year, around the quiet time, around New Year's, we had 4 consecutive red bars. But when you're in an uptrend like this, you usually, if you string together 2 or 3 red days, very often that's all you're going to get. You don't get the real, and there's small pullbacks, small tight pullbacks, and then buyers come back. So I think 3 consecutive down days has been something where the sellers have not been able to sustain the selling pressure. So all these things for me are kind of coming together to help show that this is, we had kind of described how this was similar to 1995 in a lot of ways. And, in the 3 weeks since we published that last idea, it remains the case.
So I have to say, by the way, I think we've spoken about this before, but the price streak indicator is wonderful because it's such a quick way. And oftentimes, right, simplicity is the ultimate form of sophistication. It's such a quick way to get a feel for trend. I think my favorite thing about that chart is the biggest price streak happened in November. And you can just see all those green candles. Yeah, that's such a cool indicator. That started the run. I don't know if there's any other insights you want to share about this indicator from the TradeStation team, but people can access this, right? If they need to.
Yeah, I'm pretty sure we published this on our. If you go to our profile here, I'm pretty sure that this was one that we did publish probably several years ago under scripts for TradeStation. If you look back here. I can't even remember when we put this one up. This one has existed for a long time, but price streak, here it is from back in February of 2020. Wow, over 4 years ago. Anyway,
so cool though.
So basically, yeah, and I've noticed that you're going to see these things when you get these sort of signals, like this kind of just streak of buying. Especially when it happens at like a turn or something, you can go back and look at it. It's kind of like a price gap. You don't usually get price gaps on the index, but it's like sometimes you see this high volume day or two on any stock, and then everything changes after that. In fact, I want to tell you, we're getting that today, I think, on biotechs. And I think it's important to realize the biotechs today are giving an interesting signal that I do want to jump to. So anyway, that was just the overall thing on the S&P. Let me just see. I had some other things I did want to mention on it here that I had in my notes. A number of companies making new highs. And I think it's it's also interesting. I want to look at the money market funds. Last time we quickly showed this one. I mentioned this again. This is a Fed data that shows money in retail brokerage, money market. This is cash on the sidelines, and there's a lot. So if you look back at other times, like when the market kind of peaked well, especially coming out of the financial crisis, we kind of saw it that as in 2009, as the market recovered, the money drew down, and the money was going into money market funds, going into the kind of the crash. But anyway, I think it's an interesting contrary signal, but it tells us there's a lot of cash on the sidelines here. And then another thing I think is if you look back historically, and I have it on this chart here. All right, so if you look at our breakout back here on January 19th, we're now about 46 candles after the breakout to an all-time high. So we look at some other history. For example, back here, if you look at where this breakout occurred right here after the election in 2020, after we hit a new 52-week high, the market continued higher for several months. If you look back here, after we had that breakout in October of 2019, we had that rally into COVID. And if it hadn't been for COVID, the market, there's reason to think it would have continued higher. And you can see how quickly we recovered after COVID. In my opinion, this was an uptrend that was in place, and COVID was a very large interruption, but the essential trend remained in place. So you can see 46 candles is not a lot after you break out the new 52-week high, new all-time high. Once the S&P breaks out to new all-time highs, the historical tendency has been for continuation. We see this back here in 2016. Another one was in 2013, and then all the way back to the 1990s. And you're going to see something similar here. Right here at this moment, this is where we are in 1995, May of 1995, the S&P at 522. So, I just wanted to point that out that, it might feel like we've been running for a long time, but historically, and we've talked a lot, Steph, about how you get these patterns as 18 to 24-month consolidation period with the breakout to new all-time highs. The history has favored continuation of that. Now, actually showing price streak, I wanted to add something else. I'm going to quickly, I'm going to make this, one of the things I love about TradingView is you go 3M, now you're seeing quarterly performance. Look at 1995.
Wow.
All right, so once you can see, we're only up 2 consecutive quarters. Okay, I mean, it's very easy to have a quarterly run of multiple amounts. I say very easy, but historically, we do see these kind of runs that can last for. I mean, even back here, this run lasted 9 quarters. This was 9 quarters. Then we had 7 quarters of continuous upside. So right now we're on our second up quarter since the breakout. So again, history kind of suggests that this could continue, and it's one of the things I think it's important here. So
totally. I actually want to just comment on that. Maybe you can provide more, maybe it's sort of a perspective or educational component, which is that to me is the value of doing this level of historical research, because it gives you perspective. Like you said something interesting about maybe it feels like the market's been running, and I was agreeing with you. It kind of feels like we're hitting a lot of all-time highs, crypto, equities, but then you zoom out and you see in compared to historical moments, it could just be getting started, actually.
Yeah. Well, I think it's important to realize. And I also think, it's your mind will try and play tricks with you and take your money away and prevent you from making money. And I think that right now, in some ways, just sticking with it and doing the easy, lazy thing. We all want to work hard and be smart. But sometimes, like Cool Hand Luke, sometimes nothing is a pretty cool hand. And, I think when the market is in this sort of pattern, it kind of gives you that sense that the long-term momentum will do its work for you. I think it's important just to realize that staying with it, and everyone wants to hate it. Everyone wants to try and be smarter. But at the end of the day, our job is to make money. It's not to be clever. And I think that that's really what we want to do, and trust the trend and kind of bear that in mind. So
that was fantastic. I have a feeling that a lot of viewers who just heard that were nodding their head like excellent, because I had that same thought process, especially the Cool Hand Luke quote. That's really, that's I'll be surprised how many people can connect that back. That's fantastic. I have seen that movie. So what else do you have for us?
Well, the small caps, like I said, this is one of these things that we've been looking at, and everyone's been waiting for a breakout in small caps. and it hasn't necessarily been happening. But um, another thing I think here is this is the Russell, and this is the daily chart of the Russell. Now we have on the daily chart this little downtrend, or this short potential trend line breakout, and I think this is interesting. Now the other thing is that we are now setting up for potentially, depending on how we close versus March 21st, we're potentially setting up for our highest daily close in over a year, and that's something we've talked about. We go, if we end the week around this level, we're looking at the highest weekly close in a while, and those things have triggered follow through. So I think right now it's important that if we maintain and hold this level, we can squeeze the way this market has performed. We talked about this when we saw the breakout in the materials XLB here. We talked about how we just closed and we held that weekly high and got the continuation. Well, I mean, back here at the Russell, it's the same sort of thing now. So on the daily chart, we have this falling line, and you can see this level. Now I'm going to go to the weekly chart of the Russell, which I have on this chart. And then that's the VIX I'm going to get to in a minute. But basically, here's a weekly high from the 26th of December. That week, I guess, would have been the week right after Christmas. And then you can see now it's the weekly low. Interesting. If we hold this level, we are looking at our highest weekly close since back here it would even be above this one in March of 2024. You'd be at the highest since January of 2022. Should be the highest weekly close in 2 years. If you look at the history, like what happened with the XLB and happened with other things, once this happens, it tends the recent pattern has been continuation and acceleration. So I think right now we're seeing some of the evidence of that. And another thing to me, I think it's important to realize is that we're at the end of a quarter. You often see these sort of rotations in behavior around something like quarterly performance. So I think as we move into the next quarter, also, who is the first sector that reports earnings? It's the financials. So I think it's interesting here if we take a look at, let me go to this chart, and I want to look at the KRE bank index, and we do this on a daily, and I'm going to add Bollinger Bandwidth, which is very interesting to me because the banks here have just been really just kind of dead. But this is a very tight pattern, and if you look at this bandwidth is very tight, and you also have this kind of falling trend line here. So again, if this breaks up above, it can start sneaking higher, and when you consider how tight the bandwidth has been, this might also be something that starts getting that acceleration. And it's like if there might simply be no selling pressure. People have been waiting. I'm going to wait for the banks to start breaking out. They start to get that signal. You could start to see that piling on, especially if inflation works out in a good way. And now the other thing is the biotech, XBI. Biotech and banks are the two biggest industries, essentially. Maybe not the biggest, but they're a big influence on the Russell. I'm not actually sure they're important. But what do we have in the XBI today? We have a bullish outside day. And we also have this level that it's kind of holding here. If you look, that's a weekly low back here on March 19th. And now we're basically holding above that weekly low. And you also can see here something of a falling trend line that we're kind of breaking, depending how you want to draw it. So all these things right now, in my view, are saying, if say we fast forward to the end of April and biotechs are higher and banks are higher, that's probably something of a positive for small caps. And you also consider the fact that small caps have been so under-owned and people own a lot of the large caps. We could see that rotation of people finally saying, you know what, now it's the time. So I think we're starting to get the suggestion. And with the turn of a quarter, I think it's important to think about that. And especially with the banks reporting earnings, I think all those things together could be giving us an opportunity. So I would say that if small caps start to run here, that really could, give us the confirmation that this long-awaited move has actually begun. And when that happens, there might not be much in terms of pullbacks.
So I have to say, in relation to the comment that you're making about small caps, I saw a stat today that small caps, I forget the exact stat, so this is just me just trying to remember exactly what it was, but it was something along the lines of that small cap holdings across portfolios is nearing like a decade low. They had this
Yeah.
like this chart just showing how it's just not in, I don't know, for whatever reason, it's just not being held or traded as much. But I would say that's why I find this part of the show pretty fascinating, because maybe they've been so, sort of left behind once that tide turns, it could really spark back some of that growth. And as you're showing with biotech and with banks, those are two pretty important sectors. I have done those studies before to see just how much biotech does play in small caps. So that's also a great point. Even for people watching this, when they look at indexes, I would say there is definitely a key takeaway from David there of knowing what constituents make up that index, so you know what influences it. So that was a excellent data point there. And yeah, the banks are really interesting right here with this potential breakout.
Yeah, and so I just think we need to watch these things and just, we might not get it. And I'm not, gonna just predict anything. It's just that if we do get the confirmation, though, I think there's a lot of people thinking about this, and it's been so heavily discussed. So I want to I think we just need to highlight that. So those were like some of the first big things I wanted to mention. Now, also, let's flip over to what we were looking at of NVIDIA, right? Because we did this idea on the
Wow.
7th. So NVIDIA has, pulled back, rebounded since then. But I think there's a few things here that are, I think important is just to realize, again, this is a sort of move that if you look before how something like NVIDIA traded, I mean, it had this massive move, back I'm sorry, this is jump to that. So we had this huge move here. The AI, boom started around here. They raised guidance, but then look what happened after that big gap up. I mean, it went higher, but I mean, it basically spent, like 4 months, 5 months, pretty much moving sideways. I mean, basically from that period in May, it more or less consolidated for the rest of the year. And I think, it had a lot of ups and downs, but the thing is that it didn't really do anything else. And I think if you look at the history here, well, what do we have? We've had a significant run, the earnings, and we have this candle that's a bearish outside day, and we have not gotten back above it. Like most of our price action has remained in it. Now we have a lower high on the weekly. And I think that's just something here that is, you don't want to ignore things like this. And as we move into a new quarter, again, same sort of thing. This was a quarter. This was the first quarter, trade. This is the beginning of the year, first 3 months of the year, and now it could be something else. So at the same time, though, we looked at the mid caps. And to me, the thing I'm interested in mid caps is that they're value and they're kind of like small caps. They have a lot of industrials, a lot of financials in there. And on the weekly, we had talked about the MID mid cap index. Basically, we had, again, look at this. This is the old high. And then we had the highest weekly close. We had one red week, and now we're continuing. All right. So from my perspective here, semiconductors starting to lag, mid caps accelerating, and mid caps tend to they're kind of like a less volatile version of small caps, and generally where they go, small caps can follow. So right here, in my view, the mid caps are giving you some interesting sort of signals. And if you look back at the NASDAQ before it broke out, it basically went up, closed at a weekly closing high, moved sideways, had one red week, and then the buyers stepped in. And if you look at the mid caps now, it goes to an all-time closing high, had one red week, and it looks like the buyers are stepping in. So from my perspective here, this is some stuff that we don't want to necessarily ignore. They might not be as exciting to trade as, like a Tesla or an NVIDIA, but this is where the money seems to be, potentially going now.
So I would say to that candle aspect, which you were just showing in terms of it runs to all-time highs, it's a weekly chart, then there's that one red candle after it runs to all-time highs. I feel like that candle, just for, if you're thinking about price action, supply and demand of buyers and sellers, it kind of strikes me as sort of a testing point for that individual symbol or index, which is, are the bulls still really strong enough to sort of let this thing settle and then there's enough demand to then push it back higher. So it's a very interesting sort of just concept to follow those types of runs. And then if there is that level of, okay, there's your first red weekly candle, well, now it's time to tell us, like, is this move for real or not? So I just wanted to point that out because I thought that was pretty cool. And then one thing for NVIDIA, just because we did go over that chart and you were walking us through that, and we've been discussing NVIDIA on this show now, I want to say for the last several months. Anyone who's been following this show knows that we've been watching these large cap moves. I think it is just remarkable that NVIDIA is the third largest company in the world. And a year ago, I don't even believe it was top 20. And it is now, I mean, this is a huge number to be 400 billion away from Apple, but Nvidia is closing in. I mean, you can make a case that Nvidia is sort of like really it's not as far away from Apple, I think, as people are sort of giving it credit for, which is also very interesting. I just never could see the day where Apple becomes it's no longer the highest market cap company in the market. So I just wanted to point those two things out because I thought what you were showing there in terms of your charting and research was pretty enlightening. So I just wanted to add that.
Well, thanks. And speaking of Apple, I would mention that I think Apple here, and we've said that there's a lot of difficulties on this chart. My view actually is that to a
Wow.
certain extent, Apple here, I think it's holding 170. So for me, what's kind of interesting here about Apple is that if it just stabilizes, right, doesn't, it could maybe go up a little, but if it just stabilizes, if Apple starts crashing to new lows, it might drag down the overall S&P. But if it just stabilizes and stops crashing. Same thing with Tesla. If it just stabilizes for a while, that can be enough to let the market move higher. And then it will lag, and then the strength will be in the small caps potentially. Excuse me. But the key thing is, I think Apple is kind of like it's not a fire, it's not like it controls the bleeding, so to speak, that keeps the confidence. If Apple was to suddenly knife down to like 150 or something, people might not be willing to pile into small caps and riskier stuff. But if Apple just holds its ground, it can kind of, keep the anxiety from getting too high. I want to actually add one thing, a kind of a little bit of a take on what you just said about this chart with like the small the weekly with this one red candle. I would say it's almost not a question of whether the bulls have the strength to take it to new highs. It's whether the bears have the strength to put it back where it was. And I think that's really the question here, because that's, in my view, that's kind of what it is. It's like the bears just don't show up. It's like, what if they threw a bear market and no sellers turned up? To kind of take that old phrase of what if they threw a war and no one showed up or something. But again, the market is trying to give you things. It's trying to it's trying to open a door to the bears and none show up. Well, that tells you something. And again, it's not a surprise when you go back to this chart. Where are the sellers? They don't exist because everyone has a ton of cash. And I think that's kind of important here. I do also, before I forget, I got to look at Bitcoin, if you don't mind, because I think,
Of course.
today I think we have to realize that this is not a great thing if you're on the long side of Bitcoin. Potentially, I mean, we have a bearish outside day, we have a lower high, and there's a time when the market is performing well. And I just want to point out here, the previous record high, I think was it 67,000? It was right around here. So I mean, right here, if we go back under that high from back here in 2021, I mean, I think this could become problematic. So I want to just point out here, bearish outside day on Bitcoin, bullish outside day on biotech. So
Well,
think about it.
I have to say, candlestick analysis too is a important discussion because I would say that 90% of traders use candlesticks. So I think that the last 5 to 10 minutes for all the traders watching, hopefully they just got some great insights into how to try to read into these candlesticks. And what I would say for Bitcoin that is rather interesting is that it is just sort of it's just held up, which has been rather surprising to me because I've sort of gotten this sense that maybe it's gone too far too fast. It needs to cool down, but yeah, it's held up. But that level you're looking at, the prior all-time high, it's a very interesting level to possibly create an alert at or some sort of reminder at, because that is interesting just from the sense of it does put then these historical buyers back in the red, right? Maybe if you did buy the exact top, you finally made it several years later, that trade's profitable, but it goes back under. So there is an interesting psychological component to that. So I think that's very interesting for you to repoint that level out to maybe mark on the chart if people are watching, of course.
Yeah, and I often, when I see things like this, now we have a high and a low. All right, now that's, who cares? However, now we have a lower high. So now the question is, does this now do something like this and work down a channel? I mean, just because you have a low doesn't mean anything, but when it's followed by a lower high, now I think people might start to be drawing things like this on the chart. So wanted to just touch on that because I think it's interesting to see, and again, I think in some ways like Bitcoin is the very opposite of what we just said about things like about things like small caps and stuff. I mean, that's the idea of a cyclically strong economy. It's the idea of M&A. And in many ways, in my opinion, Bitcoin really is a fintech. You have to think about it in the same context as like the big boom we saw in fintechs last decade. There were a series of them, companies like Square, and there were a bunch of these other names that were all fintechs. And I think in many ways, if you were to put Bitcoin in an industry, that's where it is. And you know what? Growth investors are no longer interested in fintechs. They're interested in AI. Bitcoin is not really an AI play. I'm sure there's some aspects of cryptocurrencies with AI, but it's not an AI play. So I think that's just something to kind of think about here. If the economy does great, that's not great for Bitcoin, and it is a little bit of it's a little bit of one of these things where it's like a safety play or some kind of idea of a stagflation and other things aren't good, but suddenly guess what? If things are good, like industrial stocks and material stocks, does it make sense to be owning things like Bitcoin in it? And also the halving coming up. I'm not an expert in crypto, but I'm looking at this year and I see a lot of good news having now been priced in. The ETF has become official. We went back to the old highs. The halving is coming. The bullish sentiment thing that's with that crypto. I haven't looked at it in the last couple of days, but it has been pretty high. So all those things come together here. One, just kind of point that out, just to kind of be aware of potentially this pattern in Bitcoin.
Absolutely. And I would say that to the comment of the halving, I've just seen so much commentary about that. Even our TradingView social network has quite a few charts and ideas coming about that. If people want to learn more or go read about it, it's all there. And the other aspect that I would add to that as well, just going back to biotech, which I just once again think is rather interesting, is that I feel like biotech at the end of the day, depending on how you look at it, is kind of a play on progress and, like you said, a strong economy, because oftentimes they are rather speculative equities, right? They're trying to pass certain trials. Maybe they have different cash situations. And so if those are starting to break out, I mean, you could start to think, well, what exactly are they solving? What type of new products are coming to market? Who knows something that we don't, that is trying to, say, buy that company out or merge with it before it releases some new cure for something. So I also think the biotech aspect in this conversation is super interesting, just in the way it's sort of like if you're bullish biotech, you're sort of bullish on a certain future, which is I find to be rather interesting.
Yeah. Well, no, and I've been watching it here, so I think it's interesting. I've been watching and hoping. You look at biotech; it actually gave us this weekly signal as well some time back. If you look here on this weekly chart, you can see we went up and we closed. See, we hit this level and we couldn't see. We just couldn't really get above these highs from over here. See, and then what happens when we had a weekly high right there? The week begun Feb 20. Basically, it was the highest weekly close. It was above this one from August of 22. The next week, boom, follow
Wow.
through. People followed it. And now we come back and to hold that level. So to me, this is the weekly of that same thing I was showing you. So I also want to just mention one other thing.
David, 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 I
Yeah,
do
go
want to
ahead.
say, going back to that chart, and because we've done such a conversation into candlestick analysis on this chart and chart patterns, is it correct for me to say, and for all of our viewers, especially the new traders, that in that example, resistance has potentially turned into support? Because I can see
Yes.
those. Yeah, that's maybe show that on the chart with a horizontal line. And as you
Yep.
know, plenty of new traders join in. They want to learn something new. Yeah, it's that to me is super interesting.
93.78. I love how I can just look at that and then I can kind of come back and adjust it. So basically, that's our close from back here in of August of 2022. And you can see we closed above it right there and got the follow through. Now we're coming back down to hold it. So I agree. And then I love doing these sort of things also when you can draw like that, and then you can draw this down here. And also, this is a week, this is an inside week. Inside weeks are continuation patterns. So after a period of consolidation and pullback, you'll see a rally and then a volatile pullback and then an inside week with compression and then continuation. And that can happen. That is a pattern people look for. And so the fact we're getting an inside week here after the pullback at the old weekly high, pretty interesting to me. So glad you actually pointed that one out, Steph.
Very. Oh, I think that aspect of resistance, these price levels it couldn't break above before now becoming a possible place of support, that sort of flip is always a really interesting component just in markets in general, across all symbols. I don't know the success rate of that at all, but I definitely watch for it and take note of it because I have seen it play out a number of times. It just strikes me as a moment that the tide has turned. There just seems to be a little more demand than sellers, so more buyers than sellers. So yeah, great. I think that's an excellent tutorial in terms of just biotech and some educational components around these charts. And what else have you been looking at in markets? Have you been at all exploring currencies at all, or is it mostly just been that some of these big equity moves have really caught your attention?
I have been watching the euro and I've been watching this kind of convergence and trying to figure out gold and everything else. My view essentially is that we're likely to see, I don't have a great deal of confidence in the strength we're seeing in gold right now. And so, from my perspective here, the euro is at a spot where it does look to me like it has the potential to break lower. And I think it's unclear to me how dramatic it could be. The European economy is not in a great spot. So usually, I don't think you're going to see a dramatic rally in the dollar in a time when the market is bullish. But I do think right now this environment, in my view, it looks, it's been to me more leaning on negativity toward the global environment. And to me, honestly, that's a positive thing though, because gold typically doesn't do well in a bull market for stocks. And so right now, my perspective, I think the main thing I think now, in many ways, is stocks are the place where people are going to look. In a strong economy, that's where you want to look. In a time of earnings growth, that's where you want to look. And I think it's important right now. I want to emphasize, I think that there's two major things we need to be aware of in the background. First of all, profit margins are getting better. Look at that last Micron report. I mean, margins were insane to the upside versus what people expected. If you look at a lot of the other, like we talked about retailers, several retailers had some really powerful margin expansion. I think we're going to see more margin expansion. If you look in the economy, we've actually seen inventories have been relatively tight. And as companies start selling more stuff, they're going to be doing it with new inventory, which means that they don't have to cut prices. So I think we're going to see margin expansion. The second thing is that we're going to see more top line growth than people expect because the economy is going to be stronger than people expect. More business means more revenue. So not only are we going to see wider profit margins, we're going to see higher top line. You put those two things together, and you have in many ways the ingredients of something that is, I think, very much an equity story that people are going to be focused on. So I think right now you might like crypto or currencies and all that stuff, but I think if you look at the environment we're in right now, the most opportunity for people looking for things that could be interesting. To me, the equity story is still has it has some strength that is actually getting better. And I think as we move into earnings season and as we move toward the Fed potentially cutting rates, from my perspective, that story only widens. And I would say that as we move toward the Fed cutting rates, I think something we have to have on our list, and it's not there now. These have been bad, but real estate investment trusts. These things have been absolutely demolished. And the thing is that when the Fed starts cutting rates, from my perspective, this could be an area where you could see people start to say, all right, the sharks are out of the water, all clear, time to maybe start thinking about coming back to this area. So I want to just kind of put that out there on people's radar, not right away, but maybe later in the year, this could be something that people come back to.
So the retail story, by the way, I just have to tip my hat to you because that's another conversation that I feel like has come up a number of times on this show the last few months. And for people following, they've probably also seen that play out as well, which I remember when you first brought that up a few months ago, I was sort of thinking retail. I still had that that concept in my head of retail's dead. It's all going e-commerce. But yes, the Abercrombie and Fitch chart look at it even just since the start of
I don't know
2024. It's just remarkable. And we'll go back to REITs as well, but walk us through this chart now because it seems to be one of the high flyers of retail's comeback.
I'm not sure what to make of a name like this at this point in time. I am not sure here. I need to look at these. These are all kind of case by case stories. I mean, a lot of these have moved pretty well. I don't think I really have any retail names right now that I'm all that focused on. Right now, my focus is I think right now I'm looking at it, especially with the banks. reporting first. Retailers come at the end of earnings season, right? That's the way they work because they have the different fiscal quarter. So I'd say right now, like, retail, something, let's maybe start thinking about that one in May, because those earnings will be coming out at the end of earnings season. Um, I want to
Well,
mention something
yeah.
on there's just one thing I wanted to circle back on AMD, because we had done an idea on AMD, and I want to just quickly go back to the chart here that we actually used to create that idea. And we did the idea with the stock up here, and we kind of identified this level as a weekly low, and that's exactly where we went down and tested. So I want to mention that Advanced Micro has gone down and tested our support level from the idea that we did. It was right around here where we did the idea, if you look on our feed. But I want to point out that AMD is trying to hold this level, and then it could be this level down here from early February. So I want to just point that out, put it on people's lists here, to be thinking about, if you're looking for entries in a name like Advanced Micro.
Yeah, and speaking of AMD and Micron as well, because I think the Micron chart is worth pulling up, but I'll quickly just say to AMD, which is very interesting to me, is do you think that because AMD did pull back the way it is, do you think it's possible the market is saying something that Nvidia's the clear winner, or do you just think it just ran too fast? One thing I've been watching essentially is who are going to be the biggest players in the AI race. Obviously, Nvidia has already cemented itself, but the thought process has been, can anyone catch them? I mean, look at Micron. Wow, maybe they're in the list, but maybe just
I would say
walk us
that's a
through that.
problem. I think Micron is a problem now for AMD, which is basically that everyone's looking for the next Nvidia, and at first AMD was the no-brainer, but now Micron is competing to be the next Nvidia, so to speak. What's the next stock that's going to go from being an old chip maker to an AI name? And maybe it'll be Intel. I don't know, but I think that's one of the things, is that there is always that sort of narrative. For me, if you look at how AMD trades, it's a very streaky sort of name. I think you need to look at this on longer time frames, like with weekly patterns here, where once it kind of enters a weekly downtrend, I mean, I think it's a name that could struggle for a while. I have found that the best signals in this come from letting it get really bad and depressing, and then it squeezes. It almost trades like Bitcoin coming off lows, where it just squeezes down, and then it explodes higher. So if you look here, it squeezes down, and you saw this like kind of false breakdown and reversal. That was your signal there on the weekly. I think that's how I think people should think about AMD, and the fact that it's doing this now tells me that it could be sloppy for weeks and months. And I think at this point, AMD could be a tricky name to be long for a while, just because of the way it typically behaves.
Well,
So,
very interesting components to the AI race and to find out who the clear winners will be. It's just something I've been thinking about. So for me, that's a nice walkthrough, and other people may find that very interesting. Now, let's definitely go through the VIX. I just want to throw out two more things that we should get to so our viewers know we'll get there, which is one, I do want to go back to that REITs chart at some point. Not now. Let's do
okay.
the VIX first, just because of the crash in corporate real estate that I've sort of been reading about. And then I also have to ask before the show ends, if we can just chart DJT, because that stock has
Okay.
obviously got exactly. Okay, let's stick with the VIX. Take it away.
Well, so just the VIX, we had kind of, I can't remember why we put this price range. I'm going to just at least hide it for now. But, what's interesting to me about this is, COVID comes as a weekly chart of the volatility index. And basically we had this explosion higher. And this whole time people knew the Fed was going to have to cut rates, because this is when rates were like zero. And then they started cutting rates in 21, and the VIX moved higher. And then it gets to that point when, all right, now inflation is getting under control. And what's interesting to me is, if you look, historically, the VIX could go, all the way down to like 10. And I think historically, and so you kind of see here, since pretty much the middle of last year, we've tried to kind of break under that kind of 12 level. And, we were refusing to do it. But I think, to me, it's interesting, if you look on the weekly chart here, that basically it was making a series of higher weekly lows until last week. So I think now we could be entering a period where people just hammer volatility lower, and we see a very kind of unvolatile, essentially, this is what a bull market kind of looks like. It's a melt higher. And if you look at other times when the S&P was running to new highs, like, I mean, a great time was, a classic time was in like that period in 2017 and early 18. You can see how the VIX just bled lower. This was a big rally in the S&P, and this time it just bled lower. And I think right now, I mean, if you look at it, and then you consider this cash on the sidelines, the relatively low amount of leverage in the market, and the apparently positive fundamental environment. From my perspective, this is something now where this is actually suggesting to us that volatility is going to go lower. So and that also just fits into what I was saying about the overall S&P. And then I want to just really quickly just say one or two others before we turn back. And that was to turn back to the REITs. And one of these was I wanted to show this one chart, which is IDCC. I mean, this name came up. I don't even know much about it, but basically it has a high here all the way back from 2017, and it had these. I almost did a TradingView idea on this, but I did something else instead. What's interesting is it rallied on earnings, held this old high, which I think is really interesting. If you look here on the weekly, you can see this level goes back here. And so it's now holding support at the old highs. It's interesting. You have a low here, a lower low, and a higher low. So you have like an inverted head and shoulders here at the old high. You have basically these downtrends that it's breaking above and holding, breaking that downtrend. Now it's getting above the 21-day exponential moving average. This is some kind of I can't remember if it's a software or a chip company, but it's a relatively small name. Is it the next NVIDIA? That's the question. It's one of these things where it's a small name that has some AI exposure, not well known. And I think you look at the chart here, there's just something interesting happening. To me, this is purely based on technicals. I wanted to mention this one.
Absolutely. And actually, just bringing us back to before we get to REITs and DJT and just a few other questions I have to ask you is one thing that catches me about this chart, and I think it's nice you pulled it up and it just connects us back to candlestick analysis, is I have to say, I rarely see earnings gaps get filled. Like you can see they clearly beat and then it just sort of trailed down and refilled the gap. I actually don't see that often. I don't know if you have any commentary on that or, what your thoughts are when that does occur.
I don't know exactly I don't know a clear pattern either. In my opinion, what you will often see is you'll see I think if you add MACD, and I don't have time to do it now, but you're often going to get your answer from MACD. If MACD is falling, you often have a stock rallies hard, it stalls for like a month and a half, and then basically MACD is going down, and then the stock rallies on the next earnings, and MACD is going down, and it just drags it right down. And then 3 or 4 weeks later, the stock stabilizes, MACD turns up, and then it rallies. So if we were to add MACD to this chart, I think you would see MACD was falling through there, and it starts now, and just now, I bet you it's turning up. I'm not sure, but I'm pretty sure it would be. So to me, MACD gives you the answer to that. If you see a stock where it's going to continue, very often what's happened is it's in a spot where MACD has already turned up, or at least it's not in the thick of a huge downtrend. So other one I have to mention really fast, Airbnb. You and I talked about Uber. We talked about DoorDash. And, I think it's important to realize, we have these companies that they were from the first decade of this century. These Airbnb, DoorDash, Lyft, and Uber, right? And the thing is what's really happened. We talked about this massive rally in Uber and these different patterns on it. But I think it's important now to realize is that Airbnb might now be following the same trajectory. It's just melting higher, and I'm not even sure necessarily why. It hasn't been earnings or anything. I just want to put it on people's radar because, again, this is one of those companies. Fast forward 10 years from now, and your Airbnb, there are certain companies that are emerging. In the old days, it was like Kodak and, whatever, your General Motors, in the old days, your grandfather, there were those brands. But now in this day and age, we have our new, great American brands. And I think Airbnb is on that list, and it's now a player in the American economy. It's the kind of stock that if Warren Buffett was 40 years old, instead of Coca-Cola, he might be buying Airbnb. It has that brand market position. So I want to just mention that one. Nothing technically, but just the fact it just keeps inching to new highs.
No, wonderful. That's sort of the business school component of our chats at times. And I like you comparing that to Buffett, Coca-Cola back in the day as sort of these new brands and new emerging companies that really resonate with a specific demographic. By the way, going back to the DoorDash chart, and we got REITs. I just was not aware that DoorDash had taken off to such an extent. I mean, whoa, that's surprising.
we talked about it somewhere over here, and I said it was just melting higher. It was like, and I think that's what it was. People were just looking out, and they were seeing the future and realizing that DoorDash is a real company, and it's a lot of these companies blew up and didn't work, but this one maybe is. So, all right. So if you want to look at the REITs, I mean, I haven't really looked at this chart a huge amount, and in my opinion, honestly, I think this is less about the chart of the REITs and more about the chart of the 10-year and seeing here, we have the 10-year is just lagging here and doesn't move. I mean, this level we talked about as being really important. There's this level here that I have on my other chart that goes back to 2008. But I think right now for REITs, it's really going to be just, I think, based on that sense of interest rates going lower. And then my sense would be you could just kind of see a stampede. So technically here, I think the trick that's been working has been to see those weekly closes. And let's go to my weekly chart because I've been trying to keep stuff on weeklies here. And what's interesting is we see this, this level. And if you look, I mean, it tried to close above it there, but I think really if you look back, see, it didn't even close. This to me would be the level to watch. It'd be this close from about a year ago, from January, February of 2023. A close above this, a weekly close above that level, in my view, would be the kind of signal that we would see. And I think right now it can just probably just drive you crazy, chopping around and not doing much of anything. And then when it starts, it could just be, a pretty, significant kind of stampede.
So, and what I'll say that's I think is so key about this chart and this part of the conversation is I have just read so many pretty what's the word I want to say devastating, maybe not devastating, but just bear market headlines, that'd be the word, about corporate real estate, or sometimes not so much residential, mostly corporate, about some of these big corporate deals to get these large buildings are being written down almost entirely, and people are getting wiped out. They bought a huge building in San Francisco 5 years ago. Work from home happened. There was sort of a migration of sorts, and now it's just sort of not worth what it once was. And so what I think is very interesting about this part of the conversation, and this happens in markets all the time, they sort of ebb and flow, is, have we seen the worst, right? And there's sometimes that comment about, avoid, I don't know the exact saying, but right, you avoid the euphoria, you kind of wait for the panic. It's kind of a Buffettism. I wonder about that with REITs, if that day might be possibly coming. And I think your research on this chart is sort of mapping out what people could be thinking about. This is some homework that I definitely want to do after our chat as well.
Well, something else. I mean, American Tower. I don't know if it still is, but the biggest REITs are not office buildings. They're actually the wireless companies. And then the other thing that's interesting is there's also a growing role of REITs in data centers, companies like DLR and EQIX. So it's not just about, vacant office buildings in San Francisco. It's also about AI. So, I mean, I think that, as things change, you can have one industry in the sector kind of struggle and a new industry steps up. So, like I said, this is like something I want to think about. I have to really quickly, if you allow me, I got to show this chart of Morgan Stanley. I just saw this one, but look at this. Look at this downtrend line. We're breaking. I just want to show we're breaking the downtrend line in Morgan Stanley. Now I'll go to DJT for you.
Okay, I have to say though on this note though, because that was such a good comment, which is right. So AI, in order for it to really, work at scale and across the country, is you have to put all these computers and chips in a specific warehouse somewhere, or many warehouses, so they can process data fast and then send it to the necessary device or computer. That's really interesting. So these large REITs are just data warehouse REITs that are paying out investors to some degree. Is that the way to think about it? Because that is a very cool shift actually in the economy. Maybe we're not going to corporate real estate again. We're moving to these very specific REITs that actually solve really important problems for tech.
Well, yeah, I mean, as they grow, I mean, most data centers, I think, are actually owned. The actual physical property is run by REITs. There's very specific ways they have to be done with all kinds of electrical infrastructure and, all kinds of broadband things, and they can't be in certain places where it floods or whatever. So, I mean, you don't just stick a data center anywhere with like a, $50 million or $100 million of hardware. I mean, there's specific ways you have to do it, and these guys are doing it. So DLR and EQIX are two in that space. And one just mentioned that because REITs are not just office buildings. And again, with retail coming back and stuff, that's another thing. But like I said, to me, when interest rates start to come down, that's going to be a sort of a go-to that people might have.
Great play for the future. And then we'll do this Morgan Stanley and then DJT. So
Yeah.
just curious about
Yeah.
Morgan Stanley. Is this sort of a large cap bank breakout that maybe shows that the banks aren't, they're not dying. They're still here. They might be ready to rumble soon.
Earnings are what, a few weeks away in this name. And yeah, again, they have wealth management, and with the stock market hitting new highs, that's not a bad thing. And then the other thing is they rallied along with Goldman after the Reddit IPO. So M&A, IPOs, those sort of things are good for Wall Street. It's a securities firm. Wall Street has been dead for a long time, the whole idea of traditional Wall Street securities business, but a bull market is positive for that. So I think right now Morgan Stanley's in that spot. Technically, it's breaking this downtrend, and it had this rally, held the 50% retracement. Again, let's see if it closes at a weekly high. We have some levels across here I think we want to be watching, but to me, this is one where it's not quite there yet. But with earnings, this might be something where we could see a potential move, and maybe if people want to be trading options, they could be thinking about some vertical spreads in a name like this around earnings, because that might be the way something like this could move.
On one of our future shows, we should really dive into options because we haven't done that yet. But I will add, just because showing Morgan Stanley and you saying Wall Street has been dead, and then seeing the chart, it's been in a downtrend for a while, and kind of looking back to our conversation about Bitcoin might be interesting at some point or for a future discussion. I'm sure those types of assets are inversely correlated. We should definitely dive into that on the next chat. But
yeah.
We're about to hit that hour marker. We've got a few minutes left. I think that we should end on DJT because I'm seeing headlines about it, people talking about it, people charting it. What are some thoughts here? Walk us through just, what you're seeing on the chart.
Well, from my perspective, I mean, I have not looked at this one very much. And a lot of this, I'm not sure that the price action here is comparable with the price action here, because you had the whole SPAC go into effect. But I would say that right now, when you look at the fact that it gapped up and it kind of made a weekly low that it held, from my perspective here, I think this is also something where we want to be thinking about, these levels are not very far from each other. So from my perspective here, this sort of period of time of about 2 months of sideways, this could be something where people want to be kind of thinking about, something of a period of time moving like this, and looking for some kind of, test back into, closer down to like the 55-ish area, and not to be kind of chasing it too much. But again, I don't know. And I don't know what other tricks might happen if suddenly Trump sells a bunch of stock or doesn't sell a bunch of stock, or something happens politically or legally or whatever. I mean, a lot of this is not even going to be in the domain of charts. But this is now a new name, and it's a new name I'm going to have to start studying, because it was before the SPAC. It was just like, it wasn't really a company, and now it is. So this is a new one to learn.
Absolutely. And I actually had shared this morning just from my social media accounts that I don't think a former president or potential president has ever had a publicly traded company. I don't know what that means or how to think about it. I don't know if it's good or bad, but I feel like it's a pretty just like, whoa, what, we're taking a turn in markets that is sort of just unprecedented. We've just never seen it before. So I think, people are gravitating toward it, and the move is just mind-boggling. I'll have to check its market cap to see what its value is at the moment. But I know that traders often like these fast-moving things. But like you said, I think that it's important to mark your levels down so that you're not you sort of have a roadmap at least to observe. And speaking of gap fills, someone in the chat had said that IDCC has a similar look to gold. And I'm also now looking at DJT with that gap fill and just wondering if we might see some gap fills across the board here, if it's overextended or maybe still too much. Yeah, this will be an interesting one to watch.
The really fast things I'd mentioned with DJT is, don't forget that the election will be a catalyst for this. Trump will probably put a lot of his commentary on there. I would imagine that you're going to have content on there that they're going to be doing that's going to be unique, that's going to try and drive traffic to it. The second thing is that now you have Reddit, and now you have this Trump social thing. So these two things now, there could be a spot here where, no matter how good Meta is, there could be a spot where people start to say, wait a second, maybe I'm going to redeploy some capital from Meta to Trump media and to Reddit. So I think it's important to realize now that the social media space now has, more options for investors who maybe are up like 400% in Meta or something. or maybe not that much, but they're sitting on some big gains since the beginning of last year, and we might see, that could trigger some rotation.
That is a great comment about this space, and it actually just becoming almost a sector on its own because there's Reddit, there's Meta, there's DJT, there's Snapchat. I can't forget about Snapchat. Obviously, X is private. Musk might take it public again. There's Pinterest. It's pretty, yeah, exactly. I mean, it's interesting to see how large this sector is getting, and it's definitely well worth watching, especially into election season, if that's how people are trying to get their news or their insights or share their opinions. So, actually, I think a good way to sort of wrap up this chat, which is this sector might have some place, for the rest of the year.
Well, I think also let's mention that, man, this is a great social channel as well. I think TradingView has been an amazing opportunity for people to kind of, learn, from each other and to share ideas and to talk to people like Steph. And I really enjoy it. And it's great to be here. Hope everyone has a great Easter and a great start to the second quarter, and look forward to being back at some point.
David, absolutely. As everyone knows, we will do this again next month. So be sure to join us, to our 600 plus viewers who joined in the live show, and to all of those who come in and watch after the fact. Thank you so much. And I have also dropped a link to the official TradeStation account on TradingView. Follow that account. After all, David is publishing those ideas and doing that research. So you have direct access to the man behind that account, which I think is just something you won't really find elsewhere, to just be able to read someone's work and then see them on a live show, ask them questions, leave comments. I think it's a nice benefit if you are interested in markets and want to learn more. So David, thanks so much for joining, and we'll see you next month.
Thanks, Steph. See you.
See ya.